All right. Hey everyone, Mark here, Mark P Markets. Thanks for joining me for another Bitcoin evaluation session. Today, I'm not going to focus as much on the day trade time frame, and I'm going to explain why. Okay, we're going to briefly go over it, but I'm not going to do that. Instead, I'm going to focus on the bigger picture because we need to get some perspective going into the FOMC meeting that's coming up today at 2 o'clock. Okay, so there's some important learning lessons here, some important educational lessons to go over going into such an important economic event. All right, so before I get started, let's do this. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right. Now, let's just say hello real quick. Hey, we got Stian. Okay, cool. Bill, good to see you. Ben, Elijah, Stacy. Hey, Jay, good to see you. Jeff. All right. Sean, hey, how are you? Okay, cool. So again, as you know, today the FOMC meeting the announcement is at 2 p.m. Eastern time, and then at 2:30 is the press conference. Okay, so this is what I consider another binary event. We had the CPI yesterday. We see the result of the CPI. Okay, and you have to understand that these type of events, anything can happen, and trying to use logic going into these events, thinking that you know how the market's going to react, can be a very costly mistake. Okay, so we want to respect the price action. The purpose of this session is to get perspective on the bigger picture, so that as we see the outcome unfold, when the event comes out, we'll have a better idea of what type of opportunities we should be looking for, or what's within reason. Okay, stop listening to what people say and instead listen to what the charts tell you, because the charts, at least, they don't give us any type of advantage, but they at least can highlight or open our eyes to important information that others may overlook. All right, and basically retail traders, they're full of mistakes. They always make mistakes, and as a day trader and as a swing trader, we're looking to capitalize on those mistakes. All right, so let's get these charts a little bigger, shall we? And we'll get into it. Oh yeah, by the way, before I do that, if you're interested in learning how I come up with this perspective, there's a link in the description for my training program. In fact, instead of going there, because I know no one goes there to check it, I'm going to show you this. All right, so you can go to markpmarkets.com and you can find out more about my training program there. And that's basically, most of the people here are students from that program. Okay. Also, speaking of the program, students, next week, probably Wednesday. Okay, again, I don't have the exact date. I'm going to have my student webinar. All right, this is a student meeting only for students, where I go over specific questions that relates to the material in the program itself. Okay, so it's a 1 hour session where I go over that stuff. So if you're a student, be looking out for that. I'm going to put the link in the Discord channel. I'm also going to put the link on the training platform, so everyone should be able to see it. If you don't, go to the Discord channel, let me know so I can give you the link. I don't have the link yet, but I'm planning to generate that link today or tomorrow. Okay, so be on the lookout for that. Also, if you're not in the Discord community, please join. There's a link in the description. There's a free area. There's a ton of valuable information in the Learning Resources channel. It's free. So I suggest you check that out. Okay. If you're interested in more than that, there's more information than that as well on my signals. Okay. So let's now make these charts a little bit bigger, and let's talk about what's going on here. In fact, actually, I like this one better. No, not that one. Hold on. This one. There we go. Okay. So very quickly, we're gonna go over the 30-minute here, right? This is just the day trade perspective, just in case something shows up. But here's helpful tip number 1: you should not trade before the FOMC meeting. Okay, just like that, after that CPI report, the price action was it was very erratic, right? And it's because we have the FOMC right on top of it, right, today. And again, there's going to be a lot of speculation. Oh, the Fed has to do this. Oh, the Fed has to do that. Don't go into this with any opinions. Right now, this market's looking strong going into the meeting, but that doesn't mean anything. All right. You can't take any of this seriously. This is highly random. So we use the 30-minute to get like a day trade game plan. I mean, this structure is clearly bullish. All right. Now, I mean, now look at this. Let's just go back yesterday at 8 to 8:30, right? This is the 8:30 candle right here. These are 30-minute bars. This is the 8:30 candle right here. This right here was the result of the CPI report. Okay. Now, as you can see, after the CPI report, the market gave it back. It went to that extreme support that I pointed out yesterday. That's what this is right here. I pointed that out before it got there, way before it got there. In fact, you can go back and watch the video. All right. And then since then, look, it bounced off that support and pretty much went nowhere. Okay. That's typical going into a day like today. So if you're not waiting for such a level, and I said yesterday, need to be selective, right? And that's what you wait for. It can take hours. This took hours to get to, right? And if you miss that, there was nothing to do. So again, look at the price action going into this now. We are now at a resistance level, all right, a key resistance level where basically the CPI tested. That horizontal line goes back. This goes all the way back to a more important level. I mean, I really have to zoom out to get there. I mean, it goes all the way back to this. Okay, so that's meaningful. I'm not going to explain all the details behind that. You can take my training program for that. But the thing is, that's meaningful, which tells us one thing. This is not a great area for longs. Now, as a day trader, there may be momentum that's worthwhile, but you can't expect a lot of follow through. Now, the point is, like I said, these next few hours, you can't expect much because no one trades into the FOMC. When I say no one, I'm talking about big people. I'm talking about people that matter, not little retail traders. Okay, so this is the thing. Bad area for long. So we know that. Possible area for shorts because of this location. So that's important when we get to our 5-minute chart. So here's the 5-minute, right? Now, again, I'm not going to be looking for day trades today because I just finished explaining that this is not a good time for putting on day trades. But it's still important to at least have the perspective. Look at the selling candle that we had 2 candles ago on this 5-minute chart. So they're aware of it, okay? But there's no follow through. We had an inside bar, right? And look, we're basically taking out that inside bar high to go higher. But we know that this general area is a bad place for longs. So do I want to take long setups here? It's probably not a good idea. Yeah, maybe there's some momentum. Maybe it continues a bit. But if I take something like that, I need to be aware that it's extremely aggressive and it can turn at any moment. So, if I'm risking 50 points or whatever, and this thing's struggling to give me 50 points, you should not stay in that, especially the closer you get to the FOMC meeting. Okay, so that's like the main educational thing you could take away from this. Don't get sucked into this. All right, everyone sees that. That's all you focus on, right? Everyone focuses on what they see in front of them. That's human nature. But what you need to focus on is this, right? Look, this. You're like, well, what's that? It's something you can't see. That's the future. And you need to realize that this location, that area that I just drew, is not a very good location for longs. That is what you need to know. That is what you focus on. An oscillator is not going to help you with that. All right. Horizontal lines will at least give us a point of reference in the future. And as you can see, these horizontal lines that I draw, a lot of times they're active numerous times in the future after I draw them. We can't depend on them, meaning we can't place limit orders because they're still random, but they give us a point of reference so that we have an idea of what's reasonable to expect. And then, of course, we wait for confirmation. That's when we can take action or not. That's what step 6 is all about in my training. So again, don't get caught up in this nonsense. Stop using their oscillators and all that other garbage because that's going to get you caught up in this. Oh yeah, this thing's going to go higher. I'm going to miss out. If you can't control those emotions, if you can't control those feelings, you have no business being in this game because you're just gonna lose. All right, and I'm just letting you know. And all those people that like to promote hope and all that other stuff and that this is a game of skill, if you still believe in that dream, you're going to pay for it. That's all I can tell you. And you're not going to pay me. All right, so that's the bigger picture. All right, I mean that's the day trade bigger picture. So we'll leave this here on the 5-minute chart just to see how it behaves. Okay, so my bet, I'm not taking any trades. I'm not even taking paper trades. Okay, my bet is that we see this thing turn red somewhere in this zone. That's my bet. All right, and my non-financial bet. This area right here, we see this thing turn red because the potential here is very low. All right, now, oh, and on the other side of that, because I always tell people, you know, you have to think on both sides of the market. I mean, this is not a good idea to short either because you are fighting this momentum. You can't ignore that. So what you look for is support levels. If you must trade or you really need to take a trade, you look for support levels. But because of the event that we have at 2 o'clock, you need to wait for extremes. Okay, you're better off. Just like yesterday, I pointed that out. Wait for extremes. This area right here, which is what is the price there? Let's see. 17,955 area, that's your extreme. All right, is that right? 955. Yeah, where are we right now? Oh, we're in the 18s. Okay, so yeah, 955 area. That's at this point, that's your extreme day trade support. Okay, and you're looking for buy signals there, and you have to babysit them. The closer you get to the meeting, the more trouble you're asking for. All right, let's now talk about the bigger picture, shall we? All right, so we're going to keep this 5-minute chart open here, and we're going to watch that. Now, the bigger picture is really the key point of this stream, and that is we want to have perspective going into that meeting, not just in Bitcoin, but in other major markets, okay? Bitcoin does not trade in isolation. If you're one of these people that, you know, you just like to watch one chart and this and that, you are not really getting the most effective information because Bitcoin does not trade alone. Either does Ethereum. None of them trade alone. There's something called intermarket relationships. So Bitcoin follows the S&P and Nasdaq. Okay, those markets tend to follow the bond market and the dollar, but it's not a one-to-one relationship. The bond market is probably the most important market that you need to keep an eye on in this environment. So we're going to take a look at the 10-year note and all that. But first, let's start with this Bitcoin chart. All right, so as I've been pointing this out for quite some time. This entire area right here is a consolidation. That's not a trend. There's no trend here. The bigger picture trend is bearish still. You could say, how's that bearish? Look, there's higher lows and higher highs. This structure is inside the consolidation range. It doesn't mean anything in terms of the swing trade perspective or investing perspective. It does not mean anything. Look at the red happening over here. So anyway, my game plan hasn't changed. I've been saying I'm looking for shorts on the swing trade time frame in this area. Okay, we're now getting into that area. And you may say, whoa, how come you never went long over here? This was a highly random midpoint. I talked about that numerous times. And I said the outcome from that CPI is either going to give us a vertical high or vertical low or nothing, right? So we got vertical high. Okay, that's what it gave us. But there's no way in advance. Now, of course, you're going to go back and you can look at your smaller time frames and say, well, look, there's a bullish trend over here, and see, the chart said it was going to go higher. You don't realize that CPI could have come out the wrong way. It doesn't matter what your chart says. It just coincidentally came out in line with the chart. But in a situation like that, that came out the wrong way and there was higher than expected inflation, this would have been a red candle. Okay, so you need to respect that random nature of the market. If you don't, and you continue to fool yourself with, you know, that markets are predictable and all that other stuff, you're, like I said, you're going to be prepared to give away a lot of money. All right, so I'm still looking for shorts here as swing trades. Now, I don't short Bitcoin, but I call the trades, right? So I have the signal channel over, you know, on the server, and that's where I put these trades. I haven't called the Bitcoin trade in a while because I don't like this price action, and there's no reason to force trades. Okay, we had that FTX trade work out basically, right? I called that before all that price action took place. It went to its target, and I haven't had a Bitcoin swing trade since then. All right, it's been quite some time. So we're now entering an area where a swing trade is on the radar, okay? So how does that tie into the FOMC? Well, that FOMC meeting, if it comes out dovish, because again, I don't pretend to know what's going to happen. I don't pretend to know what Chairman Powell is going to say at the press conference. We let the market figure it out. So when he says his thing and we have our answers, the market's going to give us some sort of picture here. I'm looking in this area, I'm looking for some sort of fake out. I'm looking for a bearish confirmation pattern. We're just about entering the area. So, low 18s, basically 18 even to 18.5, that area, I'm looking for bearish pin bar, bearish inside bar. I'm looking for something like that. Of course, there should be some decent range expansion, okay? If we get a little nothing, FOMC comes out and we get some just little noise into there, I don't know. You have to be very careful because this market wants to be optimistic, and it's also possible that we blow through this area. It's possible that we see this, okay? It's possible. I don't want to get caught in that. So I'm watching, just because we have an area of interest doesn't mean I step in front of it. It doesn't mean I have an opinion. It means I have a reasonable expectation, which can be changed if the market proves otherwise, okay? So I'm not taking any bets. I'm not calling anything until I see the confirmation in that area. Does that make sense? So that's the Bitcoin story, and a whole lot hasn't changed. If we get the selling structure in this area, that will be a lower high established. If we get that as a result of the FOMC, what did I tell you about the selling over here? So this is very possible. Right, we get that lower high. If the lower high is established, we get a big nasty bearish pin bar or something like that, then a lower low is likely to follow. Not right after the FOMC, but that FOMC can set the tone for the next couple of weeks. It's very possible. And we may see a test of low, all right, if the market doesn't like whatever he has to say, meaning Chairman Powell. Okay, so please keep that in mind. That scenario is still a possibility. And if I'm going to go long, I want to see a test of low. Okay, so I have no intention of going long anywhere in this area at all. All right, not right now. Unless we break out and retest, that's another story. But if we don't do that, and we basically just fake out and we test that low, this would be an aggressive long here. Okay, and that could take 2 weeks to reach. So keep that in mind. The idea behind the stream, again, is to give you perspective. If we break that support, we're looking at the 14K area, right? We're looking at this area, and that's an accumulation area. That's an area that I'm interested in putting in my speculative portfolio if we can start testing those prices. Right now, I'm not doing anything with Bitcoin, not yet. Okay, so that's the idea there. Let's move along here, and let's go take a look at the bond market. Okay, so when I look at the bond market, I don't look at the yields, I look at the prices. It doesn't matter which one you look at, it's the same chart. Okay, some people say, well, what about the 10-year yield? It's the same thing. Let's just make this chart a little bit bigger first. This is probably the most important chart you can monitor each day. Now, you're not going to see a whole lot of changes. Look at this price action, right? Just the other day, we had a sell signal, right? A few days back, we had a sell signal. That sell signal went nowhere. Right? There was no follow through. We had CPI report come out here and it spiked the bonds higher. Okay, great. So we have this higher low potential situation right here. Okay, the higher low, higher high is likely. You can say, oh, but it made a higher high. This doesn't count. All right, a tail doesn't count. That's not a higher high. It's just a potential fake out. Right now, the market is sitting on that high. The question is, what does the FOMC outcome, how does it shape this picture? If we get this, all right, which is possible, if we get that, then that means the market is likely seeing lower rates in the future. That's what the market will be pricing in, okay, which will be a bullish sign for a lot of things. That could be the sign of early recovery, all right? If I see something like that, and that's why I've been preparing. I've been talking about this is a good time to start planning your portfolio for the next year. start picking out, you should have your target allocation amount. You should have that predetermined, how much you want to invest, all that stuff, right? And then we start looking for what we're going to put in that portfolio. That is what I am doing. And what's prompting me to do that is this, okay? Because this could be the beginning. I don't know. We'll see if the FOMC produces that, or if we get red, okay? If we turn red and we get like a red candle going the other way, again, it's binary, we get that, then that means rates haven't changed and rates are not changing, right? That's what that's telling us. And most likely rates are in a consolidation mode, again, assuming we get the red, and I would be looking for rates to get back to here, okay, or the price to get back to here, which means rates will be still rising. If that's the case, I'm still doing my research for my portfolio and picking the stocks and altcoins that I'm interested in, but I am not going to be in a hurry to put positions on, okay? Even if we get the green, I'm not going to be in a hurry. But the point is, if we get the red, I'm going to be even more conservative, because that's not a sign of stability. That's not the sign that I'm looking for, okay? So that's the bond market. So right now, we can't make any judgments on this. A lot of people will. They'll say high or low, bond market's in a bull run, blah, blah, blah. Bond market's bullish, blah, blah, blah. But it's too early. We're still in an important area, right? Goes back to this old support. This resistance may still, in fact, assert itself. And the FOMC is going to give us the answer to that question, okay? So let the FOMC answer. The chart alone is not enough. We need that fundamental context. So that's why the bond market is so important. Bond market rallies, then we'll see pressure come off these other markets. Let's take a quick look now here. Let's go to the dollar index. All right, now the dollar index is pretty much going to reflect what's going on in the bonds. The dollar got hammered on that CPI report, and it's a good thing I got out of that euro, Stian, for minus 90 pips. That would have been a 200 pip stop, okay? But I saved myself 110 pips. People don't appreciate that sort of thing. They just say, oh, well, it wasn't a win, so, it sucks. I saved myself an extra 110 pips that I would have lost if I just kept my stop in place. I exited early because it wasn't behaving itself. Okay. Anyway, so that's a reflection of the dollar. The dollar broke this support. All right. So that's interesting. It's interesting. But here's the thing. How much lower are we relative to that previous low? Right. This area right here, right? This area, this little blue rectangle that I'm drawing there, that's not a big separation. It's pretty much very close, right? So this can still be a fake out zone. It's very possible. We're not that far away from these supports. Also, I mean, look at this. Look where we are. This is where we are right now. Okay, so yeah, I keep harping on these supports, but you can't ignore them. The FOMC will give us the answer. If we get big green on this thing today, that means rates are still rising, right? We'll see the opposite effect in the bond market. So keep that in mind with the dollar. This is, anyway, even if we were going to be bearish on the dollar, this would be a really bad price to be bearish on the dollar. I mean, you're shorting the potential bottom of this entire structure. Really bad price to be short the dollar, okay? So we'll see how that plays out. If the dollar turns, like if the dollar breaks and it really becomes a short, then to play that game, the breakout is usually not the most effective way. I don't like to take the breakouts. What I would like to see in that scenario is a retest of this support here as a resistance. And then perhaps that will give us a buying opportunity in something like the euro, possibly the pound. I don't know. I'll have to look. Okay, but we're basically playing the dollar. And then we'll be looking for lower highs to continue right after some sort of spike. I mean, so far, every lower high here worked out. If you were playing that side, I was not. Okay, I was on the opposite side of that. But we'll see. This thing's going to have to prove itself. And the FOMC will help us determine that, okay? Not the chart by itself. So that's the dollar index. Now, let's take a quick look at, let's just jump over to the Nasdaq. And I'm going to answer your questions. I see some questions in there. I want to answer them. So the Nasdaq looks very similar to the bond market, does it not? Right? That bond market has that consolidation, that like expansion sort of thing going on. And we have a very similar situation here. Look at the spike yesterday, right? This was that CPI spike, which those spikes, those fake outs, you have to understand something. This area right here on the Nasdaq keeps sucking in more longs. You need to understand that. People are mindless and they can't control themselves. So they all get long thinking it's a breakout, and now they get stuck. So if they're long, now they're hoping most likely, the market's still, it pulled back a bit, but hopefully it breaks out. There's a higher low, and they start looking for all this positive information to support their feelings so that they feel better about it. But the thing is, there's more and more longs over here. Look at the tails, right? We have this tail here. We have this situation right here, right? That was the Chairman Powell speech from a few weeks ago. And then we have this tail over here, okay? Not a good sign if you're long. So if a market that's strong should not produce these tails. A market that's strong should produce a solid green candle, right? Going through. That's a strong market. So I don't know. Not a good place for longs. That's all I can say. Some people may be long. I know JP Trader is very bullish, and he always does well in situations like this that don't require much thought, because the market just takes care of itself, right? So I think it's highly risky. I'm not interested in too many swing trades on the long side in this location. Again, the FOMC is going to give us the answer. This is a resistance area, typically not a good place for longs. If you're going to look for longs, really, you should be focusing in on this area, which, look, it tested a few times over the previous few weeks. Do we get another test? Does another test break? That's possible, all right? Especially if it gets there quickly, the FOMC can set the tone for that. So I keep bringing up that FOMC. You have to factor that into the situation when we have the results. Now, the moment that news comes out, there's likely to be like a knee-jerk reaction. Don't go by that. You have to go by how the day closes out. So if we get a weak close for the day, okay, then that's pretty much how the market's seeing it. If we get a strong close for the day, hey, that's how the market's seeing it. All right, let the market figure it out. All I can tell you is these locations are not attractive for longs. And what about the short side? Should we look for shorts? Yeah, not yet, because that FOMC needs to do its part, okay? If you're going to short something like this, an index is usually a better choice, and using options is a good choice to shorten an index, because options can really limit your risk if you understand them well. All right, I'm not talking about buying a put. I'm talking about vertical spreads are a nice way to play that game. If you don't know what that is, ignore what I just said. Okay, so that's pretty much like the outlook and the idea here. Let me know if you guys have any questions. How has Bitcoin been reacting since we've been talking about it? Look, no follow through, right? Just a bunch of nothing. Good thing I wasn't interested in taking any longs. Right? There are days you have to know when to take, when not even to bother to trade. One mistake that I used to make a lot as a day trader is I would trade every day, assuming that every day was pretty much going to be equal and offer some sort of equal opportunity. That's not true at all. There are some days where there's just lack of follow through, so your signals are going to be extremely random. You're very likely to get caught in bad trades, and then you got to waste your entire day trying to make that money back. It's just better to take the day off. Day like yesterday, I had no trades on my S&Ps. I wouldn't even open up the platform. Okay. Day like today, I'm not going to take a look at the S&Ps because it's all a waste of time. I know that. Okay. I know better. There are certain periods, right? Like the fourth week of this month, for example. Don't even bother. Okay, because volume gets too light. Yeah, there may be some sort of slow grind type of thing, but it's just not worth it. Don't even bother. All right, you're better off staying away from these days that are not, where there's no follow through and there's no action. You're just better off. Zero is better than a loss. Okay, so anyway, so that's that. So I went over some important concepts here. Let me see what you guys have as far as questions. So I saw a question earlier. Was able to close all the trades with a profit. Okay, nice. That's good, Stian. Nice job. Again, yeah, because you don't know how it's going to play out. All right. what will happen is if it plays out your way, greed will enter the picture, and I should have stayed in. But you don't know how that outcome is going to be. All right, reducing risk was a smart move for Stian. There's always another, yeah. You're not missing anything. This idea of missing out, you know how many YouTube titles I see about get in early, get in now before everyone else, and all this garbage. You know how many of those titles I saw at the height of especially the altcoins? Early investors will make billions. Those were the titles. How many people got fooled into that? And now we know the results. How many people? Probably some people here. I never got fooled because I knew better. Okay, and I'm not trying to say I'm cool or anything. I'm just saying, I had the experience to see through that nonsense, and that's what I'm hoping to teach you here. Okay, Ben wants to know, would you recommend what stock or ETF to trade oil? And I saw Stian had an answer, USO or USD WTI. USD WTI is the CFD, so that probably wouldn't be a good choice for Ben. But that's what I use actually, the USD WTI. But if you're looking for an ETF or you're looking for shares, yeah, USO. Stian put USO, USD, but USO is one that comes to mind. That's the oil fund. But look at this thing. You have to be careful with oil, right? Here's USO right here. You have to be careful because look at the move that it's had. Sure, oil is catching people's attention. Let's take a look at the CFD here, USD WTI. Look at that move. Do you know I was long oil over here and I got out at 80, and then there was this move. Okay, so now it's bouncing. It's coming off of that pretty hard. But the thing is, don't get excited about oil. Not right now. All right, not until it starts making some showing us some evidence here. You're going right into this old support level. So this is likely to turn into another lower high. I would be very cautious with oil. Don't be in a hurry to get into that, okay? I don't care what the experts are saying. Don't be in a hurry. I wonder what the experts are saying over here. All right, so please keep this in mind. Keep this structure in mind. I mean, and it looks, USO looks very similar to that, right? USO, look at that. It's very similar. So if you're going to get long, at least wait for some kind of pullback or some kind of test of support, if anything. People ask me, would you get long again after that oil exit? Would you get long again? I said no, because I don't like this situation. This is not characteristic of a nice strong chart. Now, there may be some fundamentals behind oil that I'm not familiar with, that maybe this double bottom is a broader double bottom. Yeah, we can make those arguments, right, on the bigger picture. But we're going to have to see at least some sort of higher low. I think it would be better to wait for at least a higher low than chasing it into this situation. You just have so much resistance, right? This old support that may give you a hard time. Why take that risk? That's the way I see it. Okay, so anyway, good question on oil. All right, Bill, I'm going over my time here. So let me just see if I have any more questions. I always keep a big white area to the right of my current price to remind me to think about the future. Good. Thanks for sharing that, Bill. And you should. That's why I use the horizontal lines, and I don't waste my time with things that are backward looking, like moving averages and oscillators and all those other retail gimmicks that you're constantly fed because everyone thinks that they help you out in some way. They don't. You can flip a coin and get the same result. I repeat that all the time. People still insist on using these things. Okay, have fun with that. At what entry point would you look at buying bonds? TLT. Okay, TLT. Let's take a look. Joel asks, all right, and then I'll wrap it up there. So here's the thing. Here's TLT, the 20-year Treasury ETF. Now, this thing's had a nice little run. You need to see a pullback, right? So Joel, the first thing I look for are what are my support and resistance levels? And the other thing is, let's take a look at the weekly chart because we want to get some perspective here. I mean, look where this thing is on the weekly. That's a nice little rally, sure, but look where we are. Like, this is a really not very opportune time for longs, as we can see. So what we want to see is we want to see how this structure, the pullback of this structure, right? What does it pull back to? And we don't have too many reference points here, as we can see, right? There's no little structures there to play with. I mean, let's go back. We can go back in time and see, like, where are we? There's really nothing. Look at this. All right, so we're going back. What is this here? 2010. I mean, that's how far back we have to go. That's where there's some structure. That's where we got the bounce off. Okay, so that's not going to be very helpful, right, going forward, right, at this point. So all we know on this chart is we have this level right here, right, for a possible double bottom. That's one scenario. You ask me like where I'd look for longs. That's one scenario. If we can test that, or the higher low, at least give it the opportunity to push back into that halfway area, like the 50% area. You say, well, how can you always say not to buy the midpoint? Well, we don't know if this is a consolidation, right? We don't know. And if a higher low often will develop around that area, and you can give that a chance to see if this thing is changing its structure. Again, this is the weekly chart, okay? And it probably makes sense. I mean, this is TLT. It probably makes sense to use something like the 10-year note, because it's going to be a little cleaner. It probably makes sense to just keep an eye on this as well, right? So that midpoint area, this may prove to be a good area for a higher low if you're willing to take that chance before we know if it's a consolidation or not. Maybe it wants to produce the higher low and the higher high. So that it's either the double bottom or the higher low. Those are the things I'd be looking for as far as bonds if you're looking to go long bonds. Otherwise, this area, tough spot. I mean, look at just to give you an example, look at this up here. What about all the bond breakout traders, right? All the people, oh, bonds are breaking out, and then they got caught in this nice little move. So that's what I mean. Okay, if you had been patient, not you, Joel, but I'm saying if they had been patient and they waited for this, and the market got there and never got a signal, at least you would have been able to avoid all of this. Okay, and then say, oh, no signal. Okay, and then it keeps you out. And that's really the value of when you know how to trade, is staying out of those type of situations and staying away from a loss altogether, right? Learning how to avoid a would-be loss. That's like the whole value of my training program and everything else. People don't care for that. People want to just show me how to make money. I don't care about losses. Okay, well, making money in this game is a very random thing. We can't control that, but we can control our losses and our risk. Okay, so I'm going to leave it at that. Bitcoin here, look at the recovery, right? In this area where I was expecting some red and we got some green, came right back in. Okay, but like I said, that doesn't mean anything when we're inside of this zone. Doesn't mean anything. Okay, so don't get sucked in by all that stuff. Don't get all optimistic. Like I said, if you can't control yourself, then you need to spend some more time on paper until you get a good grasp of how this game works. This game is more about self-control. That's really where the skill is. People always try to push this idea of this is a game of skill, and everyone thinks the skill is in charts. It's not in charts. It's how you control your behavior. That is the skill. No one talks about that because no one is aware of it. They're all too busy looking at charts. And these fake gurus, you have to understand what motivates them. It's not trades. It's all the stuff they can sell on top of it in the affiliate links. That's what keeps them producing material that is full of hope. Okay, please look for those signs when you watch other people, especially those who come out and show you a P&L like on their phone on a MetaTrader account. Understand that all that stuff can be faked. I know most of you know that because I repeat myself all the time, but anyone new that's watching this, understand that. Understand how the industry works, and you have to understand your role in the industry, where you fit in. Okay, anyway, so I'm going to leave you guys with that. If you have any questions, you know where to find me. Go to check out my free Discord server area. A lot of valuable information there, and I'll leave you with that. Okay, so enjoy the rest of your day, the rest of your evening, wherever you are in the world, and thank you very much for watching.